Will RBI cut rates again, or will Sanjay Malhotra hold rates steady? All eyes now will be on the RBI MPC meet tomorrow. Poll of economists say that rates are most likely to be held steady. Vishwanath Nair joins in with more details on this.
Right. So what we do know at this point in time about the monetary policy is that there is a majority economist sort of viewpoint that the RBI and the MPC are going to hold rates. That is true. However, what you need to also understand is that the voices on the other side, which are expecting a rate cut, are not that silent. Actually, the breakup is quite strong. If you were to look at 10 economists that NDTV Profit has polled, 6 of them believe that there is going to be a rate pause. There's going to be a pause by the MPC. 4, however, still expect a 25 basis point rate cut. So the 60-40 ratio is not that small if you were to look at what historically these breakups have been like. If you were to look at the stance change, now remember that the RBI about 2 policies ago had come up with a neutral stance, and it is expected, however, majority of the economists once again are expecting that the status quo will remain, that neutral stance will remain. However, 4 of them still believe that there is likely going to be a change. The RBI might become more easing in its approach. Monetary easing might make a comeback as far as the monetary policy stance is concerned. Just taking a look at where the macro indicators are at this point in time. Just look at where the June CPI inflation is. The retail inflation is about 2.1%. That's a historic low. And it's at the lower end of the RBI's tolerance band. Remember, 4% is a target, but plus or minus 2% is a tolerance band. So at 2.1%, it's at that lower end. And the July CPI is further expected to moderate. So that is going to put some amount of easing as far as the Monetary Policy Committee's discussions are concerned. Bank credit growth. There again, the June credit growth is at 10.2%. June is when the RBI made that 50 basis point massive rate cut, and since then a lot of banks have been cutting down their credit growth, have been cutting down their interest rates to boost that credit growth. However, that's still not showing in the numbers. You know, a year ago it was about 13.8%, so that's 10.2% is still quite low. If you were to look at where the GDP numbers are, the Q4 GDP number coming in at 7.4%, that showed that growth in Q4 was still strong. However, for the full year, FY25, that GDP growth is estimated at about 6.5%. So below normal, however, still strong. As far as IIP is concerned, that the index of industrial production is at a 10-month low already. And that's an important indicator because that shows that growth is slowing down, inflation is low, room for rate cut has improved, and that is why you're seeing that breakup when you look at the economist expectations. 4 of them out of 10 still believing that there's going to be a rate cut.
Right, Rishi. Thanks for that. Meanwhile,